The talk of Davos this week was, can you fix housing without breaking homeowners?
Well, what he actually said was, we are not turning into a nation of renters, essentially. So this is great because, as you guys know, we've done some videos on this. So this is very exciting, I think. It'll be very interesting to see what happens next. What do you think?
Yeah, everyone talks about that housing is unaffordable, but I think in order to balance this, you have to manage the payment and the down payment and not the prices.
Yeah, there's only a couple things that are going to work here, honestly. It's financing or supply. And the interesting thing is we all know, we talked a little bit about these $100 billion mortgage-backed security, that he told Fannie and Freddie to do, which actually got rates down under 6. That is good.
Yep.
Now, that's good. And then he went after the Wall Street a little bit too, and said, "Oh yeah, these big companies are buying up." The reality is there's 133 million households, 133 million, and somewhere between 500,000 and 600,000 are owned by public institutions or Wall Street, let's say. So it's a small number. It is a great topic, and I think it was very, very interesting, but it is a very, very, very small number. It's like 6% or something of the whole housing stock. Not to say that they don't compete against homeowners. I'm not saying that. I'm just saying that I like the way he took that stance. But you guys, I'm telling you, 2026 is going to be great, because what's going to happen is this administration is going to figure out for a way that people can afford a down payment and also afford the monthly payment.
Yeah, so really they're just trying to tackle the issue from both sides. And they don't want housing prices to go down, because that's not good for the majority of homeowners. So as Ken was saying, they're going to really try to zoom in on what makes this unaffordable. And a big portion of that is the down payment. Trump, he talked about letting people use their 401k money for a down payment, and now he's saying he doesn't want to do that. But it's not a bad idea.
An interesting call from somebody, right?
Yeah, somebody.
$9 trillion under management in 401ks. So I was like, maybe Jamie Dimon does have a little bit of influence here.
Yeah, somebody definitely called him. But the truth is the down payment is a huge piece of it, because what I'm seeing with your first-time home buyers is they're coming in, they can only put down 5%. Because 5% of a $500,000 house, is $25,000. So it's a lot. So anyways, that is the issue, is that their down payment's so low that their payment is so high based on these prices. Plus you have PMI and all this stuff until you get to 20%. So the goal would be to help them put down more, to be able to get rid of that PMI and possibly be able to afford the payment and get them into houses.
Yeah, and just to be clear, I want to go back through some basic math. You guys all know in 2019 the home prices, the average was about 300. Okay, let me just say that again. 6 years ago, 5-6 years ago, the average home price in the U.S. was about 300. Now it's about 400. Okay, so it's gone up a lot in just 5 or 6 years. So why is that? Well, if we're having this big crash, how are housing prices going up? So this is why I hate these TikTok bros. These guys are out there trying to get clicks. Let me tell you something. Prices don't go up in a crash. So, and there are lots of defaults in a crash. There are people that are 90% defaulted, after the first year's 30 days late, 60 days late, 90 days late. The percentage of those people is significantly low. This is nothing like 2008, and everybody's trying to say it is. We're at 1 million listings right now. Let's just say it's just a little bit lower than that, but whatever. Okay, that's at the low end of pre-pandemic. And just to put things in perspective, 2008 was 4 million. Okay, 4 million. So 2008, you had 4 million listings. Today, you've just hit 1 million, and that's a psychological barrier. Don't get me wrong, but in 2007, we had like 125 million households. Today, we're at 133 million. So when you really look at it, today's million on a percentage basis is significantly better than it was, obviously back at the beginning of the GFC. So what we are not going to see is a reduction in home prices. I'm telling you guys right now. The instant thing that happens when rates go down is you immediately get demand, of course, and that's what happens. You get refinances and all that kind of stuff. But then what lags is always supply. So demand's going to be instant, supply is going to take a while, and that's actually where we are. So there's a little window here, and I think and we talked about this over the weekend. The first time people, the people that jump on this train quickly are the ones that are going to benefit the most.
Yeah, absolutely. And we're actually talking about that on our podcast on Thursday, what home builders are doing right now, and why construction is softening.
Yeah. And I want to, everybody asks me, what's this market like compared to 2008, blah, 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 blah. And I'm like, listen, housing is like a parking lot. In all seriousness, it's a lot like a parking lot. So imagine, we have a big mall here, Paradise Valley Mall, and the stores that were in there, Macy's, Kmart, Sears, gone, right? JCPenney, gone. Okay. So obviously there's plenty of parking. Now they've replaced it with things like Whole Foods and things that are edgy. Now it's full. Now, why is it? It's the exact same thing with the real estate market. Exactly. When we had a household formation, we had 5 or 6 million more people in 10 years become part of the household formation. 5 or 6 million. And housing didn't keep up. So you've got the people, households were formed, and the construction did not keep up. That's the bottom line. This is just simple math. And so what we have here is we have a structural problem where we have a lot of people that became homeowners. Now this could be renters, they can also be homeowners themselves. 5 or 6 million of them. And when they're now pulling up, the parking lot is full. There's nowhere to go. And so what happens? Prices go up. And that's where we are right now. That's what happened from 19 to 25 is we have a lot more people looking for a fixed number, which is barely being added each year. And there we are. And so now we have a supply issue. And so we're undersupplied. But the one thing that is going to fix it immediately are these lower rates.
So let's talk about why home prices can't really go down. There's 2 reasons. One, and somebody just brought it up on YouTube, is the cost to build is extremely high. And materials have went down slightly, but labor costs are still high. And, if you can't build enough, to what you can sell it for, then you're just not going to build at all, right? So that's one reason. But the other reason's a bigger reason. It's a political reason, is because when the home market crashed in 2008, it almost took down the whole economy. And they had to do a lot in order to rebound the economy. And it was bad. And they said that they don't want that to happen again. And no president is going to want that under their watch, realistically. The other thing is that the real estate market gives a lot of jobs. So it's not just home prices go down in a bubble and that's all that happens. Like everyone that works in the real estate industry, think of rehabbing, think of realtors, think of mortgage lenders, think of banks, everything, all those jobs go down with it. And that's why 2008 almost took down the whole economy. So that's not, and also homeowners are a big voting base. So that's not an option that really anybody wants, Democrat or Republican. And that's why they're going to try to get people into housing versus let housing prices fall.
Yeah, obviously you guys know that any kind of reduction in home prices is, nobody wants that. You don't want that. What you guys want is you want lower prices, but not on your home, not on your rental, right? So this could be a really interesting balance here. And so what's the right thing to do? Stretch the payments. That's it. It's going to have to be a delicate balance here. But I'm telling you guys, 1 million listings, this is just barely, this is the low end of the pre-pandemic number. That's because pre-pandemic was 1 million to 1.2 million. And so we're right there. Now, could it go higher? Of course, it could go higher. But this is normal, where we are right now. And why did home prices go from $300,000 to $400,000 in 5 or 6 years? It's the supply problem. And so the only way to fix this initially is going to be with rates and with down payments. And that's how you're going to get people to, because $100,000 for, just think about it. If you're 25 years old and you were saving in 2019 for a $300,000 house, it's now $400,000. And that's the reality of it. And so that's a significant amount more that everyone budgeted for. Everyone's down payments went up. Everyone's mortgage payments went up. And of course, this gentleman, by the way, it said Pro Builder USA. Thank you, by the way, for weighing in. The construction costs, we haven't even talked about tariffs. The construction cost to build something is still really high. And you take a look at what costs to build, to add supply. You've got the cost of the home, you got the cost of the land, and then you got the cost of the money to actually build the place. And construction debt is still actually quite high. And so by getting these rates down, I'm telling you, Trump's going to get his way. He's going to get this new Fed chair in here this year, and he's already started this MBS purchase. And I would guess that you're going to have several more cuts this year. And what is going to happen, he's going to unlock all the trillions of dollars of equity that's sitting in these people's homes right now, so that money starts to flow.
Yep. And that's why they're really focusing on the payment, because when you hear Trump talk, it's all about 50-year mortgages, potentially using a 401k for a down payment, interest rates. It's all about the payment. You're not hearing anyone talk about price adjustments. And I think that that's important. And I also think it's important to note that, somebody just asked about new home builders and how their incentives are up and everything else. I'm taking clients to see new builds. And what I can tell you is their incentives are up and they're starting to change and go down. So the reason for that is the market is picking up and they understand what Trump's doing and they know that this is going to boost their sales. So they're offering less incentives currently than they were offering, let's say, early in January or December.
Yeah, and I want to look at the other side of this too, because these are going to be policies that, that drive the housing to the next level for sure. We are for sure, I want you to Google, take a look at the national home builders, take a look at Zillow, take a look at realtor.com, take a look at all these, the low income affordable coalition. Take a look at all those. They all say that we're somewhere between 4 and 8 million short of houses. Okay, Zillow just came out with a report that said there was 4.5. Some people say it's significantly higher. Whatever. The bottom line is the lowest I could see is 4. The highest I could see is 8 when you start to look at affordability. So it's somewhere in there. But even if you use the low end, let's use 4. We're short. That's the bottom line. We are short. Thank you, Jerry, for pulling that up. So we're short, guys. And so this started, believe it or not, guys, in 2007, 2008. Because what was not happening, I went through this, what was not happening in 2009, 2010, 2011, 2012, building, lending. Okay, so households were still getting formed, and people were still being born, and all that stuff was going on. So the population and the household formation, all that stuff just kept trudging along during the GFC. What didn't happen was supply. That did not happen. So we're still catching up. And so no matter what report you look at, you're going to see that structurally we're over 4 million houses short. And that's what's creating this price run.
Yep. And before we get into who this helps and who it squeezes, we're going to take time for a word from our paid sponsor, Monetary Metals.
And now a word from our paid sponsor. Normally, gold just sits there. You buy it, you store it, and it doesn't do anything unless the price goes up. Monetary Metals works on a different idea. Instead of gold sitting idle, it can be leased, much like a property or equipment through structured agreements. Certain businesses actually need physical gold to operate. So rather than buying it outright, they lease it for a period of time and pay a fee for using it. Not from trading gold or predicting prices, but from gold being used productively through those leasing arrangements. Depending on structure and risk, some of these leases have historically paid yields, with figures reporting up to around 4%. If all this sounds confusing, that's normal. Most people have never been taught how gold leasing works. If you already own gold and are thinking about it and want clarity, the best step is to simply book a call with the Monetary Metals team. Monetary Metals is a paid sponsor. This is a sponsor promotion and not financial or investment advice. Gold leasing involves risk, including the potential loss of principal. Returns are not guaranteed. This is not an offer to buy or sell securities. Review all program details and risk disclosures at monetary-metals.com. If you want to learn more, you can go to monetary-metals.com/Ken.
So let's talk about who this helps and who it squeezes, because I think this is really interesting. Like, for sure, lower rates are helping people. Now, there are 80% of homeowners are at 6% or under, okay? So we just crossed that line, like, just in the last month, which is good because we were just talking, you got a rate at 6 and 6.2 or something?
No, I have a 6.9.
Cash out refi. And then I just...
Oh, the one we just got. Yeah, it was 6.6. Yep.
6.6, yeah. And so that's a cash out refi. New home are under 6, right?
Can be.
For
I think it's
occupied.
at like 6.06.
Yeah. Okay, so we're right there. Right? So if Trump can unlock, say, another point, and we're let's say 1 point lower, then what will happen? Here, let me tell you what will happen. You're going to unlock a whole bunch of refinancing. For sure. There's going to be people that have a lot of money because let's say prices haven't dropped. So now they have in some areas, and don't get me wrong, I know you're going to see that. But the other thing that's going to happen is builders will start to build again because that's going to help. You're going to start to see things trade. And who's going to win? Realtors are going to win. Title companies are going to win. Mortgage companies are going to win. Contractors are going to win.
Well, the economy.
The economy is going to win, and all that money is going to get unlocked. And so I think 26 is going to be a really exciting year of unlocking equity that's sitting there. Because you got to think of this almost like your piggy bank. People are sitting there with trillions of dollars sitting in their homes. And they're going to unlock it. 50 grand, 100 grand, 200 grand, 300 grand at a time. Trust me, it's going to flow out. And what are they going to do? They're going to buy RVs. They're going to buy boats. They're going to buy electronics. They're going to remodel houses. They're going to all that stuff. So this is going to be a really good year, I think, as this money starts to get unlocked. And more importantly, we haven't seen anything concrete yet, but this first-time homeowner, I think Trump's going to be all over this issue because he said it I thought it was really actually great. I mean, I'm a landlord, but when he said we do not want a nation of renters, I actually think that's healthy because as you guys know, I have 2 sons, both in their 20s, and they're priced out of the single-family housing market, and of course. A lot of parents are funding their kids, but I'm trying to get mine to save their nickels and do it themselves. And so but it's painful. It's painful for them. They potentially could be renters well into their 30s, right?
Yeah. And it helps first-time home buyers, all the programs they're going to do if they get in early. Because what this also does is it's going to raise prices. And the reason for that is because when you have buyers coming to the market and you have sellers not selling because they're in these super low interest rates, more demand is going to make prices go up. Now, it might not go up like it did in 2019 or 2020, when it shot up because we had super low rates and COVID and everything else, but it's going to steadily go up. And so if you get into this early, I'm going to get another rental. Like a lot of investors are already starting to buy. So those that are sitting on the sidelines that are first-time home buyers, it's a good time to get in when they start offering some of these incentives.
And what markets repeat, people forget. I really want to say that again. Markets repeat, people forget. So what we're seeing is, and for all of you that want to time the bottom, I can tell already that you are a first timer. Like the way to invest, and this is going to really be good. You're going to unlock the investor side as well, because what's holding back people from investing right now is cash flow, and the biggest expense by far is debt. And so you've got your rents and you've got your expenses, and then you've got your net operating income, and then you've got your debt. After that is cash flow. And the cash flow is either good or not good based on your debt. And so as all these builders and all these big contractors and these investors and these people who want to refi, this debt is everything. It's going to unlock equity. It's going to start new projects. It's going to, people are going to now. Thankfully, a lot of the sellers now are they realize that the rear view mirror is gone, and now they're having to look out the windshield. For those of you who know what I'm talking about, so just some of the pricing with some of these people have just been ridiculous, and they've got the heck beat out of them, and they realize, and so we're starting to see prices normalize. We're starting, and I'm talking about mostly on a lot of commercial, but even on some or on single family. This is going to unlock a lot, and I really think that in 1 year, we could. I'm going to go out on record here. What are we, January? By the end of the year, I'm going to say that you're going to start to see some rates in the high 4s. So right now they're in the high 5s. So this is the year to really get your team together, get your cash together, get your investors together, start looking, start building your team. And of course, number one, make sure things cash flow. If they don't cash flow, pass, period. This is not a time to try to bank on, next year is going to be better. This is, thankfully, this is when I came up in the business. I came up in the business where things had to make sense on day one. And the market wasn't going like this. Thank God. Because if the market would have been going like this, maybe my assumptions, I would have, next year's better than this year. But not now. We don't know what next year's going to be like. So lock in today, fixed rate. And then if rates go down, refinance, and just refinance all the way down and just ratchet that thing like and just lock that rate in, man, because that debt is important. Knowing your monthly payment is important. And if inflation does its thing like I think it's going to, you're going to be very happy because inflation is going to run faster than your cost of your debt. And it's going to price, your real estate's going to go up as a result of inflation. Now, so will your expenses. But so will your rent, hopefully, if you buy in the right spot.
Yeah, and Jim from YouTube said, you'll never outsave inflation. And I think that is a very good line, especially really for those that don't own homes yet or that are saving up for an investment property. Like, you can keep trying to save, maybe you have 10%, but you're trying to get 20%. Like, homes are going to go up faster than you can save.
Jim, the line of the day.
Yeah.
You can never outsave inflation. Yeah. That is the truth, guys. Mm-hmm. I mean, you just look at the numbers. By the way, you guys all know I'm flying up to see my mom this Friday. It's her birthday, her 95th birthday. Say happy birthday, by the way. She still owns the home that I grew up in, right? And they paid $10,700 for it in the 60s. It's worth $700,000. And my mom, as a hairdresser, as you guys know, she's not a real estate investor. At the time, they paid it off, which is cool. There's no debt on it, haven't been in a long time. But here's the point. It's her savings, period. That's just a fact. That, and so what happened? Inflation. Inflation made my mom look really, really smart as a real estate investor. But really, she was just buying a home for her family. And I think that's what we're talking about. Lock it in, let the tenant pay it off, and if you're an investor, but lock in, guys. I'm telling you, ownership, when you have ownership, your choices change a lot. You start to see the world a little bit differently when you're actually paying into an asset as opposed to somebody like me who is a landlord, and you're just paying me rent. Trust me, you want to get involved. You want to get in the game. You have to get in the game, and in order to beat inflation, you have to, because inflation, it's coming. We don't know how bad. Obviously, there's all kinds of narratives around this. Who knows where we'll end up? But the reality is, if what's a 2x4 going to be in 5 years, in 10 years, right? What's a roof tile? What's an appliance? All that stuff. You guys saw this in the last 10 years. For all of you, you saw this stuff all go up. All right. It's not, you can't just point your fingers at Trump and Biden. I'm telling you, inflation's been here for a long time, and it's going to be your friend if you're in the game. You have to have assets. And so Jim was spot on. It was a phenomenal comment.
I'm seeing a lot of first-time home buyers, too, wanting a payment assistance. You know how they did like $10,000 for every first-time home buyer? They're not discussing that. That's not even coming up in the commentary. That actually can, that's the stuff that can really inflate things as well, is just giving people money. So I think they're leaning more towards, possibly this 401k thing, or, they have other options, 50-year mortgages, but they're really not talking about down payment assistance. So I would be surprised if that is on the docket.
Yeah, I think we're at 19,000 for that gift tax. That's per person. You don't have, there are things that you can do, guys.
You mean if your parents gift you 19,000?
Yeah. I mean, I know, but I'm just saying there are ways to get there, right? And for those of you who are, saving like crazy, like we did, so that cash flows, the money will be there. Telling you, it just will be. If you're really interested in investing, that's how I started. I found a deal that was broken, and I just figured out a way to fix it. I found the money. I put it together. I gave the investors the majority of the profits. It's in my first book, The ABCs of Real Estate Investing. I wrote about it. I'm telling you, this is going to be a phenomenal time. And just, as rates go down, don't worry about timing those, because they could go up. If rates go up, you want to be fixed. If rates go down, you refinance, and then you fix again.
So Club Amore is saying, Obama made a 0% down. I think that was Bush, right? That did 0% down on homes. The issue with that, there's two things right now. Is one, that is part of what created 2008, because when people have no money down, they can easily walk away versus, having 10% down or whatever. The other issue is that home prices have went up. So if you put 0% down, your average housing payment is going to be in the $3,000s and maybe $4,000 a month. And that's like the bigger issue. That's why the down payment is such a big issue, because like I said, I'm working with home buyers that are only trying to put down 5%. And their payment is so high, and there's PMI on every, depending on the loan, the PMI goes up.
And that's called private mortgage insurance, and they consider you a risk if you don't have at least 20%. So that's what PMI means.
Absolutely. And then on FHA, that's permanent for the loan. So, these payments, you could have $300 a month in PMI easily on a loan if you're putting 0 or 5% down. And that's a lot of money on top of, a 6% rate on a $500,000 home. So you're just getting to the point where it's unaffordable. And that's why they're trying to fix the payment. Because right now the payment is unaffordable versus trying to lower the price.
I like the comment though, the fact that the administration was trying to do something, and they're right. And actually what happened is, Bush kind of started, as Danille said. Then Obama kind of got the brunt of the GFC, really, because it was and homeownership went up to a 69.2%. That means renters went down to, call it 31%. Now it's back up to 35%. So home ownership right now is about 65%. But the reality is these policies that are rolled out by whatever administration they are, because Clinton had one, Bush had one, American Dream, own a home. That's where that's where Trump's headed, in my opinion. And you're going to start to see this stuff. Don't forget, 0% down is 100% financed. That's right. Another way to say it. It's 100% financed. So the 0% down is a marketing gimmick. Even though I really like the comment, just know that. And there are other things. And the other piece that we haven't really discussed is the cost to own a home. Is a Bankrate did a really good study on this. They said it's about $1,500 a month. That's average, of course. But what is that? That's insurance. That's property tax. That's utilities. That's capital work that you might need around the house, depending on the condition. So,
well, yeah, I just got an air conditioning unit and for a condo, and it was $15,000. I know. I think a few years ago it was $7,000.
That's a lot of money for air conditioning. By the way, this is like a 1,200 square foot condo.
Yes. Small.
That's ridiculous. And this is kind of my point about inflation, guys. Like, if you own, that's still painful. But if you own, there's going to be a cost. And so in addition to the mortgage, so you've got the down payment, of course, you got the monthly payment, of course, and then you've got the monthly operating costs. Those are the three components that this administration is going to be tackling. And I love this. I actually do think that I would love to have affordable housing. I would love for people to build their credit, and I would love for them to save, and I would love and not get crushed by inflation, and I would love for them to be able to buy a first home. That's, I think, what everybody wants. So whatever policies come rolling out, just know that you've got these little windows. And I think, I'm telling you, this administration is going to push these rates down this year. By the end of the year, prediction, number one, under 5. It's going to be 4.8, 4.9 for homeowners, not necessarily cash out or renters.
Or investors.
Or investors, yeah.
You know, it'll be interesting to see if it works, right? Because what they're trying to do is they're trying to get more buyers by making, giving incentives for them to get into the game. And you also have, you do have an affordability issue. So there's a downward pressure along with an upward pressure as well. So it will be interesting to see how this all turns out, and we'll be watching the market, every single month.
Yeah, I just looked at, there's actually still $1,000 problem between the average monthly mortgage and rent. Rent's about $1,700, and home monthly mortgage payment is about $2,700 roughly. Obviously, this depends on where you are, but that's nationally. So that we still have $1,000 gap between home ownership and renters. So that we have a ways to go there.
Yeah, it's going to be very interesting, but we're starting to see a little bit of bidding wars come back to the market.
This is the year, guys. I'm telling you.
So
come on, get your team together, get your capital together, get your investors together. Go to conferences like Limitless. Seriously, Limitless Expo. I'm not just doing a shameless plug here. Literally, you're going to have, last year we had 700 accredited investors in the room. These are people that will invest in ideas and things and businesses. And so, we'll have 2,000 people there. It's in August, unfortunately, in Phoenix, the 14th of this year, of August 14th to the 16th, I think it is. So anyway, love to see you there. We'll be there, both of us.
And stay warm. We're pretty cold here in Phoenix. I had to wear a sweatshirt this morning. So those around the country, just, I know a lot of you are snowed in. So have a good snow day.
Okay, guys.